if you want to make the argument that all this stuff is going to be as profitable as the market would have you believe over the next 5 years, you know what kind of productivity and GDP growth you'd have to have?
I mean,
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. Any references to performance of securities are thought to be materially accurate and actual performance may differ. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional.
And we are back with another edition of the Daily Dots. And we're having life conversations in here today. Chase was doing some, what do we call that?
we usually do this on the couch, but
Yeah. Okay. Yeah. Well, that's, yeah. With my feet up on the edge of it. And yeah, just you trying to get all of the nonsense out of my head. No, but yeah, just life conversations, man. Living and learning. You know, may that never end. But also, one of the funny things about it is when you realize that you've screwed something up, or you realize you've abandoned a part of your process that you didn't know that you'd abandoned, right? And all of a sudden something happens and you're kind of doing inventory and you're like, why? And you go, oh.
bittersweet aha moments.
Yeah. Where you're glad that you found, you know, hey, I can get this back on track. But simultaneously, you're recognizing, for lack of a better term, the damage that was caused by not having it on track in the first place.
It's like the check engine light comes on. You finally figure out what the problem is, and you're like, yay. And they're like, but it's the transmission.
Or if you own a boat, there's just a check engine line on or light on all the time. I've just come to realize that check engine lights are just part of boating. People are like, yeah, your check engine light's on. I'm like, hey, it means it's running.
Yeah.
Right? It means we're getting power. Bad news to you is good news to me, right? Anyway, so a lot to discuss here. Obviously, get to the markets. 18-inning game. You know, I said something on social media the other day. There was another guy that responded, was like, can you please save the sports talk till the end?
I guess not.
No, can't do it. Can't do it. And that's the beautiful thing about podcasts.
There is a fast forward button.
Yeah, you can fast forward. Quite honestly, I would assume everybody was doing that anyway. You know, just
I hit that 15-second button enough times, or 30-second button.
Yeah, you know what's better than listening to Zach talk about markets? Listening to him talk about markets half the time, right? That's the one thing better. But no, an 18-inning game, and then just the one thing I've heard a couple people make comments. I took a lot of flack when I put that tweet out there that Shohei Ohtani is unequivocally the greatest professional athlete of all time. I'm not a baseball guy. I don't like the Dodgers. I don't know if I think it's one of those weird moments where people need to step back and go, are you paying attention to what's going on here?
The announcer last night after the second home run perfectly stated. He said awe and wonder are like so difficult to come by, and that Shohei inspires it. No, yeah. Nailed it.
Yeah. Did he have 2 dongs again last night?
Yeah, he had
4 for 4, and then he was on base 9 out of 9 times.
Yeah, they basically gave up, and I think they made it clear like they're not pitching to him ever again. Like after 4 straight extra base hits, like do the math, just walk him.
Then he'll get up tonight and throw a 1-hitter. It really, like I said, I didn't mean this facetiously. I was like going, look, up until him, you know, I would tell you that I thought the 2 best sportsmen of all time. I mean, you can make an argument with Michael Phelps. I played a round of golf with him. It's a little name drop there.
It depends on how far you go back and all that kind of stuff.
Yeah,
so,
yeah.
Like
depends.
Jim Thorpe was pretty special. Like Jim Brown.
Obviously, Michael Jordan. Obviously,
Yep.
Tiger Woods. But I felt like my analogy with Michael Jordan rang true. If Michael Jordan was so good, the Bulls could play with 4 and he simultaneously could play center and guard, then I'd put him up there with Ohtani, right? But just what he's doing isn't, and it's no knock on anybody else. Michael Jordan couldn't have been a better basketball player, right? He just wasn't all of these things at the same time, and he wasn't doing something that nobody thought was possible, especially in the day of specialized sports. I mean, to be a pitcher or a hitter today in Major League Baseball is not at all what it was 30 years ago.
No, that's a great point. And what it requires physically to be good at both like the muscle memory, the recovery from pitching, like it's hard to put into words. Like that's why I go Jim Thorpe, Jim Brown. Like Jim Brown, people said was maybe the best lacrosse player of all time, in addition to being, one of the best football players of all time. Or you think about Jim Thorpe being a multi-sport, just total star, things like that. Like where it's going like a sort of a cross discipline.
Yeah.
I told one of our advisors today, I view like the best baseball players on like a Mount Rushmore, and then there's this towering mountain behind Mount Rushmore that is Shohei Ohtani looking down on the rest of them.
Yeah, there's just no comps. And then then let's throw on to the fact that the guy's got like sprinter speed and dropped 50 bags last year. I mean, it
doesn't make sense.
No, it literally is the closest thing to like a video game child creation. Like, hey, Dad, go back 15 years ago and look at take what Shohei Ohtani is right now in MLB 2026, the show. I know that name because my boys have that game. Okay. If you would have showed us that 15 years ago and we would have looked at what Ohtani did in the video game, I would sit there and be like, oh, some kid made a super player, right? Went in there and juiced up the stats, everything. Oh, it's like my son, my boys in Madden have created 7-foot receivers before that had full speed,
99, everything.
Yeah, exactly.
I feel like Shohei's like a 103 on Madden, rating.
Yeah.
And it's kind of like, to keep it Japanese, to go Nintendo, it's almost like he's playing Mario, but he's like got the star the whole time.
Yeah, that's a great that's a great one. Yeah,
he swallows a star before he goes on the diamond every night.
Full, like all the time. The guys start out all the time. Yeah. Now again, this is a show about finance and markets, but it was funny because finally on the radio, I was shocked all the pushback I was getting from that, from people arguing with that. And then I heard one of the guys on the radio sitting there going, I just don't think people have the ability to in real time, like absorb what this guy's doing.
No, to make it like an investment, like parallel. It's almost like he's like, he can run like Renaissance's like black box algo that makes like 100% a year, but with like part of his capital and then another chunk of his capital is like macro swing trades. Like he's Druck, but he also has like a long-term value sleeve that's like performing like Buffett. Like he just does all that. Yeah. Well, like better than everyone at the same time. It's crazy.
Yeah, it really is. And it's like watching a test tube, baby. I mean, it's just,
he might be a super soldier. We're not sure. I would like some confirmation he's not.
And somebody brought this up too, which I would be absolutely shocked if he couldn't be a very successful professional athlete in other sports.
There's no way.
There's no way he can't.
I feel like if he dedicated a year of his life to pick a Olympic sport, he would be, top percentile in almost all of them.
Yeah, maybe with the exception of soccer, just because of like the time required to like learn how to handle a soccer ball.
You don't think that guy can do some curling? Because I do.
Oh, yeah, I think he could curl. I think he'd melt the ice, right? He'd be curling like nobody's business. But then I also think about him as a receiver in the NFL.
I mean, with the size, speed, yeah.
I mean, that's the other crazy thing is
eye coordination.
And he doesn't have a slight build.
No,
he's just a freak, man. And then Japanese on top of it, right? Like, how many Japanese guys do you see that are 6'3" built like him?
Yeah.
I mean, what a freak. Just a freak.
Reminds me of the South Korean soldiers they put at the DMZ. They put like the best of the best, and they're all like Taekwondo masters and stuff.
Yeah.
And they all wear like aviator shades, don't move. So like, and all of them are big, and they have like a razor, like the specifications, to use a dehumanizing word, for like the people that work at the DMZ is like crazy strict. They're all like the same height, weight, like you name it. And, total freaks at Taekwondo and stuff.
Yeah.
And you see these dudes and you're just like, I don't even want to almost mess with that guy.
Yeah. He's like tapping into like the Shogun type lineage. You know what I mean? Like there's some samurai blood in that guy.
I think he's all samurai blood.
Yeah. It's concentrated or something. Like they were spinning that around in a vial.
I feel like he would have been the show again if it was a different time.
Yeah, right. And that's you know what?
I'm not sword fighting the 6'4" fast guy.
No, what? Yeah. Well, did you see that blur that just ran through here? He stole, rather than bags, he was stealing katanas. You know what I mean? He wiped out our whole storage unit. I don't know where I'm going with that, but pretty amazing. Anyway, on to markets. Let's get a little rundown on the indexes. What do we see on the day?
More cap weighted bonanza, Mag 7 only. So S&P finished the day at 0.23, Q's up 7.7, small caps down 0.5%, and get this, equal weight down 0.86. So you're down almost a full percent on equal weight S&P, but yet you have Mag 7 up 1.32. So over 2% outperformance for Mag 7 versus the average S&P stock. So really just all Mag 7 at this point. All world ex-US flat on the day. Dollar essentially flat, down a tiny bit. Bitcoin down about 1%. Oil down 2%. Gas down 4%. Gold down 1%. With miners managing to be green on the day despite that.
Go figure.
After, more downside than gold's had the last few days, that'll be, to be fair. Silver up a little bit. Yields down another 1 basis point. Yields have not been moving in much at all lately, but still down. You're at 3.97, so still a smidge under 4. One slightly notable thing today, but also kind of not, is vol was green on the day by about 3%. But if you think about, equal weight was down almost 1%, so that kind of makes sense. It's just that bizarre of a breakdown, and basically like the only factor that's working is size. So
yeah, this is and it could, and the reason I say that is there have been some years in the not too distant past that have shaped up similarly to this. So my approach could, and I wouldn't be surprised at all if through the end of the year my approach is wrong. But this is a market going back to the Meg 7 thing. I think this is one time too many. I think you're just too stretched here. In the past, I would have been much more concerned on missing out on that, and I'd probably be hedging it. I just look at the board today and I go, if that stuff's going to run, I'm fine underperforming for the next 2 months of idiocy. I can't move. I can't miss all these other opportunities that I see. And if that stuff's going to run, and if the fundamental reasons behind it are real, then this other stuff needs to run a lot more than that.
Yeah. A lot of that was NVIDIA up 5%.
Yeah.
So most of the rest of the Mag 7 was not that big a deal. It was basically semiconductors just hoovering up capital.
And that's the one thing about this market that I think you have to keep in mind, because technically speaking, you look at the charts, it's checked all the boxes. I think you're cleared for takeoff to move substantially higher. Okay. But that's kind of what this market has done. And it's what all markets do, but especially this market. It wouldn't surprise me at all. It's not how it's our position, but it wouldn't surprise me at all if our outlook that we had on this market, which was considerably more negative just 2 weeks ago, I would not be surprised at all if that plays out still into the end of the year.
Yeah, the chase dynamic and the
and
Q4
what's rallying,
yeah.
What's not. You know what I mean? Like this to me, yes, technically speaking, like I said, all everything's a go, right? It looks all good. If the Meg 7 had been coming off a tough run, I would think much differently. I don't think those names, multiple expansion on those names, I don't think is going to be a sustainable driver of this next leg of the market going forward.
Yeah, I agree.
And even the move I saw on NVIDIA today, it's just,
unless their margins keep ratcheting higher, which is not impossible, but
it's about as clear. It's not impossible, but you can see it from here.
I don't know. The CapEx, as I laid out the other day, has bothered me too much for me to be down with it.
I know. And it's just gotten to that point. But here's the thing. I also fully expect these companies will start, they will start sequestering that out, and watch, they're going to start, if they haven't already, I mean, they do to a certain degree, but I think they're really going to start breaking out. Hey, here are total earnings, but here's what you should focus on.
Yeah, they're already doing special purpose vehicles for the lending and stuff, for the borrowings. So it's sort of like sneaking in the debt and stuff.
Yeah, it's. But watching, and that's kind of one of the things that makes me the most suspicious of this whole thing, is the fact that the market is treating like every invested dollar like it's a guaranteed 5 to 10x winner. You know what I'm saying? That's what these things are pricing in.
Yeah.
And the one thing I think that you can know for sure in this environment is that all of those things are not going to be 5 to 10x winners, right? Every dollar invested in this space is not going to be exponentially productive. It's just not. And if you listen to a lot of the allocators that are currently, managing and overseeing this investment, if you listen to them, they'll even tell you they're not expecting that type of return. They're paying prices for this stuff that they know is uneconomical, because if it is the real stuff, the cost of not being involved is far greater.
Yeah. I used the phrase mass psychosis the other day, and I'm struggling to come off that. I
think it's a fair.
I posted on Twitter today a foreign affairs piece that basically outlined exactly what I said, whatever, yesterday or whatever day that was. Like, this chase for super intelligence for AGI is, unless it's real and we hit it soon, like, it's just such a massive misallocation of cap.
Mm-hmm.
Like,
mm-hmm.
When there's all these like uses and applications for this stuff that we're largely not even, we're like basically glossing over, instead of trying to productize it and make a bunch of money and make things more productive, we're just trying to make an alien intelligence.
Right, which is, if you think about it, it's the perfect storyline to mark the zenith of this longest, biggest bull market in U.S. history.
Yeah, and the scary thing is, I feel like China gets it and they're doing it right. Like, you see it, especially when you think about the robotics angle. Like, I just read another thing from people that did like a site tour of an EV plant, I think it was in China, multiple, and they were like, there is no people. Like, robots are doing the welding. Robots, like, they do everything, and they do it fast and efficient. And I'm sure you've heard of these dark factories in China. They don't even need lights, because robots don't need the lights on to do the work. So this whole factory floor is just
pitch black
because they don't need the lights.
Well, one of the notes that I was writing down is, look, and I'm an American through and through, love the country, all that kind of stuff. But I'd just be remiss if I didn't make this simple observation that you and I were talking about it yesterday, and I thought about it more last night. I thought about it again this morning, and I was thinking about it right before you brought this up. But you made an analogy, or it came up in conversation. You and I were kind of kicking this around. And we came to discussing kind of like the U.S. and Britain circa 1930. I really hope that this isn't the case. But I think if you step back and you look at the dynamics between us and China, there are clearly some big differences. And I'm not saying it's a perfect match. My fear, though, is that that's actually a pretty good analogy for where we're at today with China. And what I mean by this is, even looking at the way we're dealing with AI, right? The note I wrote down was financialization versus actual production.
Right.
Right.
It's just like, it just came out the other day that
they've got dark factories, and we're putting together these BS
we have
circular
14,000 private equity firms or funds.
Yeah.
More than we have McDonald's,
with 8,000 private equity with companies that actually qualify to be private equity.
I mean,
of size that would fit, that would be targets for those. Right. Also, looking at what we're doing, China's building dark factories. We're engineering meaningless Ponzi-like structured deals between Chat GPT and that's what scares me. Is I'm sitting there going, you brought something up, and you said, or just right here, this last little missive you were on, you were saying, like, I don't think people are paying attention, right? There's too much investment. There's too much. I don't think that's even what I think. They are paying attention. And I think that they're just playing the stock go up game. And yeah, I think even the CEOs are like, I think they know that this is extend and pretend time. And I think that they know that this is their last great horse of this move. And they're going to try to get the maximum valuation on it.
I mean, if it's your job to raise capital and get your valuation up, yeah, you'll talk all day about how just any minute now this thing's going to take over the world, right?
Yeah. Yeah. And you're going to, and to justify the type of investment we're talking about here, the normal applications of where they can apply it, it's not, this reminds me of that classic scenario in Silicon Valley, the show, right? When he freaks out and profits.
Yeah.
No profits now, that you're giving them something real, right? That to me feels like what they're doing. They don't want to start, they don't want the meter to start running on the revenues coming off of this, because the minute they do, we got to shut the dream machine down, right? Now we're going to be tethered to something real. And that is my biggest thing. And I actually think I think the guys running the tech companies, I think they know this.
They almost need a bust to make them
more affordable,
to make them focus on doing it right.
Yeah.
Like there's areas they can monetize effectively, you know, if they had to, and make some decent money. But if you do it today, then the guy across the street doesn't do it, and everyone's like, well, let's go to the free one, you know? So like they can't.
No, they can't take the risk.
If the guy giving away the free one goes belly up, then you can be like, all right, well, how would you like to buy things on our application, and we'll take 8 cents for that transaction.
Yeah, and again, I know beyond a shadow of a doubt that writ large that work is not getting done. And the reason it's not getting done is, you know what? I mean, think about it this way. If you want to make the argument that all this stuff is going to be as profitable as the market would have you believe over the next 5 years, you know what kind of productivity and GDP growth you'd have to have?
I mean, right.
I mean, are you going to out loud project Microsoft's revenues to grow 50% over the next 4 years? We did have to even grow more than that, honestly, to make it worthwhile.
And I guess if you hit the AGI, you may get just totally insane productivity, but I just feel like we're stepping over really useful productivity gains to get to that. And not to mention, the amount of money you're spending for it. Like you can lighten up the models, tighten them up, make them cheaper, run them on slower, older chips and stuff the way obviously is possible, and put out amazing products already. And it just concerns me because that's where the focus is in places like China, and it's pretty clear. It's not like no one's in America's working on stuff like that. They are, but the big boys with all the market cap and all of the fundraising and everything, they're not. They're just trying to make a silicon overlord, a true silicon overlord.
Yeah. I just got done explaining this to a client on a call where I just said, look, because he was asking me about AI, and I said, look, I think it's going to be a huge deal. And I go, but what I think everybody's forgetting to do is quit telling me how great it's going to be and show me over the course of the next 5 to 7 years about how we get an attractive return that even comes close to the net margins that this company's putting out already. Tell me how we get it off of the size of this investment, meaning like everybody's just moving past the investment working part, and they're just going to it where you're like, guys, the bigger the investment, the bigger the success to justify it, right? Like
right.
The return on that has to be exponentials above the investment.
What I don't like is that the investment, that the CapEx is so, it's like a treadmill. Like you think about the railroads, you built them and then they're like, cool, like we can basically use that railroad for 100 years, 200 years. Yeah, it needs some maintenance, but like you don't have to rebuild it. Whereas this, like you kind of do have to rebuild it.
And look, I agree with you. And in that way, this business it's not the opposite, but it's very different than the businesses that they've been running. Because if you look at these tech companies,
exactly,
they had to do stuff around the edges, but they all built turnstiles. And I keep using that analogy, right? Which is the vast majority of the cost is realized once and up front. Exactly. And then after that, you're doing maintenance and stuff like that. But you're just like, think of Amazon's turnstile, Amazon.com, right? Google ads, right? It's these self-perpetuating flywheels.
Scaling it doesn't, like the costs don't scale with the product.
Yeah.
Whereas with this, it kind of does.
And you've got competition coming at you from every direction all the time, and the switching costs are virtually zero.
Yeah, I know I said this a long time ago, but to me and it's gonna be difficult, but the money's not gonna get made in the ones building the backbone of it. It's gonna get made with the ones that build the best mousetraps on the backbone.
Agreed.
And it doesn't feel like anyone's even thinking about it that way, looking at it that way, even though that's painfully obvious that that's the way you should treat it. But
and it's
unless someone creates,
And the reason I don't push back when you use a word like painfully obvious is because that's how all new technology spread. It's never the technology itself that's the biggest winner. It's who takes it and makes the coolest thing with it.
Right.
Right. Like, for instance, go look at
Rockefeller did pretty good on the back of the railroads, right?
Yeah. Yeah. Exactly. And you know what? That's a great analogy, right? It wasn't just the railroads. It was what he saw they could be used for and how they saw they changed the business. Microsoft's another example of that. Microsoft did not become the kings of software by making the best software. They became the kings of software because they recognized the opportunity to make it ubiquitous, a one language across all of it, and then alleviated the task of creating their own proprietary software from the computer manufacturer's hands and convinced them they were doing a solid by just giving it to them, right? MS-DOS and the original version of Windows. And then through that, again, through them harnessing that new technology and seeing out the way it was going to go, that's where they created it. I mean, if you looked at the big initial winners off of internet, that most of them aren't even around today.
Right.
I mean, the idea that America Online wouldn't exist in any substantial way in 2000, go try to tell that to people. They'd been like,
especially the infrastructure, people that built the internet.
Yeah.
Like that mostly didn't go well.
No. Yeah.
And then just like the people that built the railroads and created that bubble, like most of them didn't make a bunch of money. A lot of people did make a lot of money. We had a lot of productivity on it, but it wasn't usually the people that borrowed a ton of money to build a railroad.
It's actually funny that you put it that way, because I'll take another step further. I think that by far the biggest fortunes will be made off of other people catapulting off of this spend than the people that actually did the spend.
Someone that can come in and build an amazing, really useful application and then find the cheapest model and just subscribe to that, they have almost no cost and they get to go charge amazing fees for a great product.
Yep.
And you don't have to build AGI to do that. You don't have to build anything to do that. You can just be like, here's our small payment for your model. Thank you. And here's our great tool that we built for the consumer.
But something on the other side of it too. And it was just a reminder yesterday of how I just think that it clearly is.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. Any references to performance of securities are thought to be materially accurate, and actual performance may differ.
Another misconception I see floating around this universe, and I haven't spent a lot of time formulating this, so bear with me, but it was really interesting. I saw the what is the Tesla robot called? Optimus Optimus. They had this thing in New York. Yeah, he's handing out candy, but he had a power cord attached to him. You know what I mean? And I sat there and I thought, this is so interesting. And I feel like this is so emblematic. Everybody's focused on the robot. They're not focused on the power cord, right? The power side of this equation, right? Because talk about the picks and shovels way to play this.
Speaking of, that's a big piece of news from the day. The government doing a partnership with Brookfield and Cameco, who own Westinghouse, $80 billion worth of reactors, going to be bought, and that's going to include some loan guarantees and all, just pure industrial policy stuff to make sure it happens, cutting red tape and stuff.
Yep.
This is exactly the kind of thing I've been screaming for, frankly, for just under a decade now. And to be clear, I think Trump 1, Biden, Trump 2 have all done a pretty good job with nuclear, but this is like the step where it's like,
now we're actually moving.
A lot of small little wins, but this is let's build a bunch of big reactors and let's start now. So I think it was good to see this now. I want to see the first ones start breaking ground and all that stuff, soon, but very good news. And to your point, you got to power all this stuff, especially if we're going to keep up the potential lunacy of chasing the, full blown super intelligence stuff. then yeah, like we really are going to need that much. But if it's a bubble, so will be the power.
Yeah.
But at least you have really useful nuclear plants.
Well, no,
on the
but
back
just
end.
but little things like this, and these are the things you have to watch out for investing. What I was going to say is maybe the first robot isn't the absolute best AI. Maybe it's the ones that figure out the way to not have it plugged into the wall.
Yeah, and that stuff is out there already with pretty decent, batteries and stuff, and battery chemistry research mostly out of China gets better and better. They got a bajillion PhDs just working on that, and a whole lot of school programs just for that stuff.
You need a physics breakthrough on that side of it, though. I think
so. In doing the aluminum research, like using aluminum instead of lithium in the chemistries, that's like a potential solution that looks pretty promising. And there's all kinds of different chemistries that look promising. And the beauty of AI is it helps you figure that stuff out faster. But I think you'll get it. I don't know how long and who's going to do it and all that. But I mean, even just what CATL's done in the last 5 years, like they just passed everyone on battery technology pretty quickly. So it's going to happen.
We also had an NVIDIA deal announced today of some kind, didn't we?
Nokia. They're putting $1 billion in Nokia for something. I don't know.
And that makes their stock go up $250 billion.
Yeah, Nokia's went up as well, of course. But the circularity between chips and AI companies and hardware companies has gotten pretty wild.
Yeah, and here's where I think that you have to assume that these guys know what they're doing and that they're doing it on purpose, meaning just trying to gin the stock up on stuff that shouldn't. At least this is my take on it right now. I feel like the fact that they're saying these things, like $1 billion investment in Nokia is worth a $250 billion bump to your market cap, they know it's not. And that type of action and that type of behavior from them is the thing that has me the most concerned about the short-term viability of AI. Meaning if they did not share some of those concerns, I just can't imagine them. If I'm CEO of NVIDIA right now, I don't want it going up $250 billion in market cap on no news, just because I have to recognize the fear of this thing is going too high for stupid reasons over a short period of time. And then, we all know what happens on the flip side of that parabola, right?
Yeah. I mean, it definitely inserts potential. I think they did a deal with Palantir on something as well. So you just got, two headliners getting together. That's always going to create juice. You can't get through a few hours in a day, much less a day, without pick your top 20 AI stocks without them announcing some big deal. I mean, we're a beneficiary of this one, but PayPal announcing the payments deal with OpenAI and, stock up a good bit on that. Well, OpenAI, I guess, formalized their end of the nonprofit thing and all that stuff today as well. But
I mean, yeah. And we've talked about the large numbers problem, but it just still continues to get more and more impressive. I mean, where you're sitting at with NVIDIA right now is you're basically, if your outlook is that you expect a 50% increase in the stock, that increase that you are looking for on the price of the stock is the equivalent of 10 years of revenue at present. Not 4 years ago, not 3 years ago, 10 years of revenue at present would equal 50% of the current market cap.
Like, requires an incredible amount of growth and an incredible amount of nothing going wrong.
Yeah, or
They've done it for the last 2-3 years,
or requires them to 6 to 8x their revenue. That's always possible, right?
I mean, given what they did in the last 2 years, I'll say yes.
Yeah. Okay, fair. I would take it another way and be like, hey, what do we think the chances are they flip that one again?
But if that's the case, then the rare earth thing's going to get a lot worse before it gets better.
See, and this is what I keep coming back to. And this is the part that I think investors are just missing. Guys, if it's going to be that good, if those prices aren't a joke, then you still shouldn't be invested in those things. If those prices are legitimate, okay, how does that inflection not happen to other countries' AI stocks, right?
Right.
How does that not happen to Chinese tech?
Not to mention the resources that it takes to build it all.
Why isn't it reflected in rare earth metals needed to do all that, right? Like, again, even if your prognostication, as crazy as it sounds, even if it's true, and even if you could guarantee me it's true, I still don't want to be in that stuff right now. I don't think it's the best way to win.
Yeah, right.
You already have. You've won.
Yeah, if that stuff's right, then you can just put me limit long nat gas contracts in 2030, and I'll just take that and be okay.
More importantly, I think if that stuff's right, I would just look at you and say the definition of investing and diversification has changed. All you need is 7 stocks. Forget everything else. I mean, that's kind of where you're at, right? I mean, like if to keep pressing this button, you'd have to just say these are the only 7 stocks you ever need to own.
I mean, that's where the market's sort of viewing it lately.
Yeah.
But if they're the ones that have to spend all the money to get this thing to happen, other people can have it.
Hey, and people were like, well, that has been the case for the last 10, 15 years. Well, yeah, it has. But go back and look at the levels and the prices you were paying for this stuff. A lot of that Meg 7 stuff was trading at between 20 to 30 times earnings and was growing revenues at greater than 20% a year.
And increasing margins,
yeah,
cash flow, and you name it.
Yeah, so you can't.
But that's not the case.
No, it's just not at all the case anymore. As a matter of fact, it's inverted.
They actually have to pay for the revenue now.
Yeah.
And
a lot.
That's different than not having to pay to scale up how much you pay for revenue.
Yeah. And then when I see charts like EEM versus the S&P 500 or Latin America versus the S&P 500, I just sit there and I'm like, look, I'll chat. It's another one of those investment decisions you put in the category of, hey, if we're wrong, I can live with it. And I am fine living with being wrong on that. Because
if you're right, it's a generational turning point.
Well, and if you're wrong, you're breaking like every rule of fundamental investing. You know what I mean? Like it's if I'm going to make that play, I better be right. I think the risks are I think they're shifting is what I mean. Yeah. Where I think the greatest risk as a portfolio manager over the last decade was not being long enough US tech. I think the greatest risk going forward over the next 2 to 5 years is going to be being too long US tech. I really do.
Yep.
So anyway, anything else you got to add to that?
No, I think we're good.
What do we got coming up later this week? Anything important?
Fed tomorrow, so that'll be big.
That's big.
We know they're going to cut. We don't know if they'll NQT. They should. Like the stress in the funding market suggests they probably should. I would think they do, but we'll see. Not a huge deal if they don't, but we'll keep seeing stress, and then they'll have to do it in a month or two. But so really, this is more about what they say about looking out over the next quarter or two than it is about this particular cut. Like, the jobs market is bad enough for them to keep going. This is the way they see it. Inflation expectations, despite the fact that inflation itself is still a problem, inflation expectations aren't. And I think as long as that's the case, the Fed's going to keep cutting. But 3-month annualized inflation is 3.6. Like, I mean, which is something, everyone was bragging about 6 months ago. Like, oh, hey.
I know. I was thinking the same thing, man. When you show me the unemployment rate, you show me the inflation rate, and show me the valuation of the stock market, if that's an environment to cut into, I'm sorry. There is no point in the economic history of this country, and I'm not saying it should or shouldn't. I'm just saying at no point ever would the data today be used to justify a rate cut.
If you scatter plot the cross-section of current inflation and unemployment versus monetary policy, this one's like a weird outlier where you're like, they're doing what? They're not hiking?
No, and to be fair to them, I think that the on the flip side, this is an environment that is unlike any other that we've with different inputs.
They're being forward-looking instead of waiting for something to break, which I'm okay with that as a principle.
I am too, but I also, again, as a student of history, realized that this is not the only time that central bankers and policymakers thought that they had inflation under wraps.
For sure.
And it didn't turn into a grease fire on them.
Right. And I don't think they have it under wraps personally. So
I think it's impossible to argue that they've got it under wraps. I think the rate is substantially higher in real terms than their numbers are showing for a variety of different reasons.
For now, the market gives them cover. The market doesn't think inflation is a problem. So
party on, man.
Yeah. I think it becomes a political problem before it becomes a problem for the Fed, but we'll see how that one turns out.
And then interestingly enough, I think that how much of a political problem, I mean, obviously the level of the inflation matters a lot, but I think that part of that political calculus is if inflation is ramping, what's the S&P doing in return? Because I honestly think the biggest way to shield yourself politically from inflation is to have the market going up to a degree that surpasses inflation.
That plays well for the people that have money, but there's a lot of people that vote that don't have that much money.
No, I agree. Yeah. But what I'm saying is even people that don't have a lot of money, I think that the mass populace has always misconstrued the stock market and the economy. I don't think it's ever been more true than it is today. I think.
Speaking of, I think,
and we also know too that more retail people are involved in playing the market today,
right?
Than way more than there were 10 years ago.
No doubt about that.
Yeah,
which is just, scary because you know why people are there is because it's gone up more than anything. So everyone's going to be overloaded on something that may hurt them, in a significant way. It's disconcerting thinking about the future, but
yeah, to say the least.
Yeah.
Anyway, all right, buddy. That does it for me. Does it for us as well. Hopefully you guys have a wonderful evening. As always, find us on social media, on Twitter at KYR Radio and Chase at Pinecone Macro. And then find us on YouTube, Know Your Risk Podcast. Just search us, Google Know Your Risk Podcast. Not tough to find. Or just go to Know Your Risk Podcast and sign up and subscribe. And we'd much appreciate it. Anyway, have a wonderful evening. We'll see you tomorrow for another edition of the Daily Dots. You're listening to the Know Your Risk Podcast. Download and subscribe at knowyourriskpodcast.com.
Investment advice cannot be given without a client service agreement. Zach Abraham is an investment advisor representative of Trek Financial, an SEC registered investment advisor. Bulwark Capital Management is a marketing name only and does not carry a separate registration.